In this video, we deep dive into the first-time homebuyer incentive program by the Canada Mortgage Housing Corporation. How does it work? Who can apply? And when does it start? As well as more information. That's starting right now.
Welcome to Homebuyer School, brought to you by Brookfield Residential.
Hi everyone, I'm Carl. Welcome to another Homebuyer School video, a channel where you get the latest strategies, tactics, and tips from home buying experts. And remember, if this is your first time on this channel and you want to get the latest strategies from the experts, hit the subscription button below, hit the little notification bell so you don't miss anything. So today I'm joined by Mushtaba Sayed, mortgage specialist with the Bank of Montreal. And today, what we're going to talk about is the first-time home buyer incentive by the Canada Mortgage Housing Corporation, which we talked about before, but we have more details for you today. So let's recap again, Mo. What is the CMHC first-time home buyer incentive?
The CMHC first-time home buyer incentive program is actually catered towards first-time home buyers. It's actually built in so to get people into their first home a lot easier and sooner. And it kind of helps alleviate some of that stress test that was put in by the government or the Bank of Canada. So brief details. So annual household income for first-time home buyers shouldn't be more than $120,000, which is perfect in their range. They obviously can't have owned a home before. It has to be used for their primary residence. And the mortgage loan can't be more than $480,000, meaning that purchase price has to be, I would say, within that range. We couldn't be too much of a high purchase price. So it'd be perfect for anything except the major urban markets in Canada, right? So instead of Toronto and Vancouver, everywhere else, I think this would be a perfect program. A couple more details about that. So if you're buying a used home, so not through a builder, which is considered to be a resale home, CMHC will actually put in 5% as a shared equity. With a brand new home, it'd be 10%, which is once again shared equity. So if you ever decide to pay them back or decide to sell your home in the future, it would be 5% of the appraised value or the sale price at that time.
So just in terms of that, so let's say you buy a house at $350, right? And the house gets appraised in, 10 years at $450, and you use the first-time home buyer incentive, and it's a brand new home, so it's what, 10%?
10%, yeah.
10%. So the house, so you owe the government, or the government takes back 10% of the $450, not the $350 price. Correct?
Absolutely,
right.
yeah,
Okay.
totally. That's dead on. So it will be 10% of the equity, right? But it works both ways. So let's say if there's any appreciation in your home price or home value, they would get that. But there's also, if there's a decrease in a decreasing market, they will also get that. So in a way, it kind of works in both ways. And then I respond to clients when clients ask me this question, saying, well, what's the point of the government getting a little bit more than they put in the original? And I explain to them is that yes, there's a benefit to the government, but there's also a benefit to you guys as well. So putting an extra 10% in a brand new home, that means that's 10% less mortgage payments that you have to make, less interest you have to pay on your mortgage balance because it's been reduced by 10%. So your down payment originally goes from 5 to 15%, which makes a big difference. And over the long term, let's say in 10 years that you sell your home, you could save just as much money in interest alone and mortgage payments alone than you would have to pay them out. So in a way, it's a win-win situation. And it's a great program, in my opinion.
So let's unpackage this a little bit more. How about people who So let's go about who can apply. So when you say first-time homeowners, can you unpackage that, because that can mean anything, right? So what is the definition of a first-time home buyer according to this program?
Yeah. So definition of a first-time home buyer is someone who hasn't owned a home before. They're looking into their first purchase, or someone who's bought a home and then maybe have sold it and haven't been a homeowner for at least 4 years is also considered to be a first-time home buyer. All of these people are considered to be first-time home buyers to kind of use this program and avail it. But in this program, there's certain stipulations as well, which is the household income portion and the borrowing amount. So you could be a first-time home buyer and you could be making, let's say, just slightly over 120. You wouldn't qualify for this program. So annual household income, meaning that includes you, your spouse, or any other family member that's buying the home, has to be less than 120,000. And another really big stipulation is the purchase price of the home. Let's say you can't go out and buy a home for $900,000, right? It does not work under this program. I think the maximum mortgage amount is going to be around the $480,000 range, which is perfect for markets that are really needing this program. And I think it's a great program that the government brought in, because I remember when the stress test first came out a couple of years ago, a lot of people thought that the government brought this in to actually cool down some really, really hot markets. But then all the markets got affected, which is everywhere in Canada except Vancouver and Toronto, and everyone had to kind of go through the stress test. This, I think, would kind of even it out and really alleviate some of the stress tests put in by the rising markets in Vancouver and Toronto or major urban areas in Canada.
So one thing, when we talk about the stress test, how does this impact the stress test, right? Because it's when you take the stress test, it has to be 2% above what you, I guess, qualify for, right? In terms of your rate. So how does this impact? How does the 10% for brand new homes or the 5% for resale home, how does that impact?
Yeah. So with the stress test, it's 2% over your posted rate or the bank account's posted rate, whichever is going to be greater. So that 2% can actually work out to be maybe a couple $100 a month, maybe a little bit more depending on your mortgage amount. But taking that 10% home buyer incentive program, you can actually take 10% less of borrowing needs. So for example, let's say you're buying a house for $400,000, you come up with 5%, which is the original, nothing's changed on that side. CMHC comes up with 10%, so let's say that's $40,000. Now you have $60,000 of down payment, right? So $60,000 less that you have to borrow for that purchase price. So that stress test will be alleviated based on the amount borrowed. Even though the stress test is still there, it's going to impact you less because you're borrowing less. And you'll be paying less interest on the borrowed amount, right? So keep in mind, in a mortgage, the most interest that you pay is in the first 5 years, which is compounding. So a lot of people ask us that and saying, is this a benefit? I think it's a great benefit because whatever they put in, you'll probably save that or more based on just payments and interest alone by the time you do have to decide to sell or buy or pay out or buy out the CMHC home buyer incentive program.
How about down payments? Does the 5% down payment still apply, and then, or do you have to pay more, or do you have to put down more?
So the minimum requirement is still the same. Nothing's changed. So it's minimum 5% to buy a house, right? There's no such thing as zero down mortgages anywhere in Canada. Some lenders do have borrowed down, where you could use a borrowed down for down payment, but still has to be minimum 5%. So 5% still has to come either from borrowed sources or your own sources, and then the other 10%, depending on a brand new home, will come from CMHC, or 5% will come from CMHC if it's a resale home. So that doesn't change, right? So it just adds towards your down payment. So it could be anywhere between 5 to 10% to 15%, depending. You might even be able to go to 20%. Let's say you have a 10% down payment and you want to borrow another 10% for a brand new home. You will still qualify in this program. A lot of clients also ask me like, hey, if we come up with 10 and CMHC gives us 10, can we bypass CMHC altogether? And my understanding is you can't, because it's their program, right? You can't just come up with 10 and then they give you 10 and then you don't use them at all, right? That doesn't work. So you would still have to kind of pay some insurance. Insurance costs would be less at 20% than it would be at 10%, for example. So still a benefit, but in my opinion, you can't bypass CMHC just because you're coming up with 10 and they're coming up with 10.
So that was actually my next question is, can you come up with 15 and they come up with 5? And yeah, can you bypass, stop paying insurance at all, but you still have to, because you yourself have only come up with less than 20%.
Yeah, exactly. Right? So that's a good point. But the other point I look at is their program, right? Like you can't bypass them out and take their money and not use their services, because they are providing a service, right? They're providing a shared equity service, and then that is what they're going to be compensated on. But we are still waiting for a lot more details to come out. Like I said, September 2nd feels like it's around the corner, but every day we get a little bit, tidbits more of information that we can share with you. But as of right now, this is our basic understanding of how the program works. So
for September, you actually raise a good point. When is this program active?
This program goes live September 2nd, 2019. So it gives a lot of lenders to get around it, put their policies in place, and put their systems in place to actually accept this. And yeah, we will be going live September 2nd across the board.
And just to add to that too, because what we saw is it's 1.25 billion over 3 years, right? So if you actually think about it, there's actually only a limited time that someone can apply, because there's only a limited amount of money, right? And so as a buyer, you'd probably think that all the other buyers in regions that are not in major metropolitan areas would want to take advantage of this. And then how much time do you have left to actually get the 1.25 $5 billion that's going to be spread across the country, right?
100%. So, like Carl said, very limited time, very limited resources, right? So, in my opinion, it's first come, first serve, right? So, you got 125 billion earmarked over 3 years. So, let's say if the 1.25 billion, it might not even last the 3 years, depending on how many people are getting it and want to avail these services or this program. So, based on CMHC's initial, what they were thinking initially, they were thinking they would actually add 100,000 new first-time home buyers, depending on which market they're in. So it could be in markets that are looking at the maximum 480. It could be in markets using less than the 480. But in my opinion, this program won't last too long because it is going to be it's only very limited resources, right? It's not unlimited. So.
Is it? And then the second thing I want to point out is it only provided by CMHC? So how do you actually apply this program? Is it to any lender?
So the way it works is that, so as of right now, we know it's CMHC's program, but there are 3 insurers or 3 insurance providers in Canada. CMHC, which is Canadian Mortgage Housing Corporation, is first. They're actually a crown corporation, meaning that they're an arm of the government. So it was their program that was actually brought out, which was actually asked of them by the federal government to see what they can do. So they came up with this program, and it's usually the case that when they roll out a program or make a change, the other insurers follow suit. The other 2 insurers are Genworth Canada and Canada Guarantee. They're more private insurers, but they act exactly the same. And all banks have to deal with these 3 insurers, right? So anytime that you're putting less than 20% down, it is mandated that we actually go through insurance providers to get that lending, and every bank has to follow that. So all the banks will be following it. There's a really good chance all 3 insurance providers will be following it. So it's going to be available to technically every home buyer, first-time home buyer, and all the banks available.
Okay, so let's go through a quick specific example, right? Just to make sure that if somebody says, as a first-time home buyer, let's say I want to buy a house for $350,000, right? If it's resale, it's 5%. If it's new home, it's 10%. And how would you apply that? Do you go to the bank and just ask them to use this 5 or 10% insurance? How would that? How specifically? How does that work for first-time home buyer?
Yeah. So let's say you're coming in and applying. So say September 2nd, program's now live. You're coming into your bank. You're talking to your mortgage specialist or to your lender, and you say, I want to take availability of this new program, right? The first-time home buyers program. And I really want to actually stress that. So let's say this program, it's definitely still something, is one of the availabilities that you have to actually help you. It's not that you have to use it every time. Some of my clients come and ask me saying, is this a great program for them? And I explain, it depends on your specific scenario. Well, let's say you're buying a house, right? Let's say it's a little bit run down, but you want to put some sweat equity into this program and you're qualifying just fine, or you can get a co-signer like your parents that want to help you out, or you could come up with your own down payment. And then let's say you buy the house for $250,000, you put your sweat equity into it, you make it a lot nicer, a lot bigger, whatever you want to add to the home, and you sell it for $350,000. Is this a great program to qualify under CMHC? Probably not, right? You could probably get help from, let's say, a family member. You can still get extra down payment, let's say gifted through a family member and bypass them, and then the equity growth that you actually do based on your own hard work stays with you. So once again, this is something that you want to have a discussion with your specialist or your banker at that time to see, is this program right for me? And then once you guys have figured out that this program is right for you, you would tell them, I would like to go ahead and avail this program. And then the banker or the specialist at the time would know what to do, because now all bank systems will actually be set up to actually have this provided. So does a 10% come right away? Does a 5% come right away? All that stuff we still don't know too much about, but we will find out closer to that time how bank systems are set up. All you have to worry about is that the purchasing amount that you're borrowing is going to be decreased by that amount, whatever the home buyer incentive program is bringing on. So it doesn't change anything on your end, but it's going to be something that the bankers and the specialists or the lenders will actually have to sit down and figure out on their end and work with CMHC hand in hand to make sure that this is a smooth process and nothing's going on. And I can guarantee you, banks are technically just doing that as of not just today, but as soon as the program was released to see. That's the reason why it took such a long time. People were asking, why is it taking such a long time for this to come out? Is because they want to make sure this program is perfected. So when it does go live, there is no issues, there's no hiccups, that when you're ready to buy your first time home or your first home, that it's a smooth process altogether.
Perfect. So the question of the day I have for you is, are you actually going to take advantage of the CMHC first time homebuyer incentive? Let us know in the comments section below. We got a great video series on how to get your first mortgage approval right here, as well as videos on mortgage rates, which you can see right here. Don't forget to subscribe to keep hearing from the experts. We'll catch you in our next video.